What does this positive real yield in the US versus the UK and Germany say about the relative value of stocks and bonds in the US versus Europe?
Well, I mean, I would say this is not quite how we look at it. We see stocks as offering better value than bonds in this environment pretty much in every geography, US and Europe equally. Mm-hmm. As I was saying, we've been surprised by the speed of the increase in interest rate, but what keeps surprising us is the extent to which markets seem to be pricing in a relatively high inflation coming through in Europe and in Japan, almost on a parallel path as in the US. And that we don't think is appropriate. We do think inflation is definitely coming back to target very soon in the United States, and markets are beginning to price this more appropriately, but there may be some further way to go there. Whereas in Europe and Japan, we see inflation developments being still pretty sluggish and very, very far from targets. And in our view, the rates markets have got a little bit ahead of themselves there. So you know, I mean, I'm not sure this has much of an impact in terms of the relative attractiveness. I think irrespective, we see rates going up from here, and you know, we're relatively we prefer short duration positioning, but definitely we see the pricing of inflation in Europe and Japan being too aggressive.